Good morning, friends. On the day of Akshay Tritiya, we have released new stock idea today from fundamental side. We have initiated coverage on McLeod Russel with the price target of rupees 339. There is a potential upside of around 27% from the current level in the stock. Why we like McLeod Russel? There are few key investment arguments because of which we like McLeod Russel. First is that favorable global demand supply mismatch of tea would bring in a lot of positive for the domestic tea producers, including McLeod Russel. If CY 2011 was another year of production shortfall in most of the key tea exporting nations like Kenya and Sri Lanka. In Kenya, the production was down by 5.3%, while in Sri Lanka the production was flat in CY 2011. So this has widened the gap in the global demand supply of tea in the global markets. In India also, though the production grew by 2.3%, due to the increase in consumption by 3%, there was a overall cumulative deficit of 50 million kgs in the Indian markets. This, along with the even in Kenya and Sri Lanka for January and February, there was the production decline in tea. So this is favorable kind of scenario which has built up for the domestic as well as the international tea producers, as prices are likely to move up, and because of which the realizations for the tea production is going to improve in the coming years. We are expecting around 10 to 15 rupees increase in the realizations for FY 2013 and FY 2014. McLeod Russel is world's largest tea producer with production close to 100 million kgs, which is around 5% of the global production. Also, around 2/3 of the tea production is more than 2/3 of this tea is produced in India. The company has around 62 tea estates globally, and its total area under tea is around 38,755 hectares, which is 1.1% of the total global world tea under the global world total area under the tea. With domestic production capacity lying at around 92 million kgs, we expect McLeod Russel, one of the strongest player, to grab an opportunity in the current favorable demand supply scenario in the global tea markets. We expect higher realization. Because of the higher realization, we expect margins to improve in the coming years. Tea industry is highly operating leverage industry, so improvement in realization has direct link to the operating margins, margin improvement of the tea companies. We have seen for McLeod Russel the operating margins improving from 10% in FY 2008 to around 26% in FY 2011, and with further expected improvement in the realization, we expect operating margins to move up to around 28% in the coming years. Also, because of the strong cash flows in the recent past, the company was able to deleverage its balance sheet. It was able to reduce substantial amount of debt on its books, because of which its interest cost came down substantially. So because of that, it's adjusted. So because of strong improvement in the margins as well as the reduction in interest cost, we have seen significant growth in the adjusted PAT for the McLeod Russel, with margins with realizations likely to improve in the coming years, as well as margins likely to improve in the coming years. We expect strong cash flows, cash inflows to remain in the coming years. So because of that, we expect the dividend payout ratio of the company also to improve. So that is the another trigger in the stock. Overall, for we expect McLeod's top line to grow at a CAGR of 16% over FY 2011-14, and its bottom line to increase by around 21% over the same period. Even after excluding the upside from the 25% treasury shares which a company has, the valuations are attractive from the current level, as stock is trading at 8.5 times its FY13 earnings of rupees 31 and 7.1 times its FY14 earnings of rupees 38. We initiate coverage on the stock with the buy recommendation, and our price target stands at rupees 339, valuing the stock 9 times its FY14 earnings. Thank you.